Hey everyone, Lee from Setters Property Finance here. Welcome to the channel and part 3 of our Ultimate First Home Buyer's Guide series. Today's video will go over some typical purchase costs you should expect during the purchase of your first home. Like always, if you have any questions or prefer assistance, feel free to contact me from the details below. My service is free and I'm more than happy to assist you. If you're new to the channel, hit the subscribe button and activate notifications so you don't miss out on the next part of the guide where we will be discussing LMI. Last time we looked at grants which can assist you in the purchase of your first home. If you haven't already, I suggest going back and watching part 2 before this video, as it will affect the costs discussed here and LMI, which we'll discuss next week. Let's jump in. Putting the deposit aside, the first cost related to the purchase of a property is a building and pest report. It's not mandatory, however it is recommended. These inspections assess the property's condition and identify any structural or pest-related issues. The cost of these inspections can vary depending on the size and type of property, but it's a worthwhile service to uncover any potential problems with the property. Before signing a contract, ensure there's a subject to building and pest clause in it. Provided the clause is written correctly, it will allow you to exit the contract if you receive a building and pest report which is unsatisfactory, or give you the time to make further inquiries as to any pest or structural damage found during the initial report. They aren't expensive. You should generally allow for around $500 for an initial report. Obviously, if you find that structural damage has been caused by termite infestation, for example, and you decide to delve deeper into the property's condition, you should anticipate additional outlays such as expenses for an engineering report or thermal detection. When you're in the process of buying your first home, one essential component is conveyancing. Conveyancing is the legal process of transferring the ownership of a property from the seller to the buyer. A conveyancer will organise all the appropriate documentation required for settlement, communicate with lenders, and provide legal advice where needed. For a typical house or apartment purchase, allow approximately $2,000 to engage the service of a conveyancer. As much as I don't want to, I have to say it's not legally required to engage the services of a conveyancer in any state or territory in Australia. You can purchase a DIY kit for around $120, save the money and do it yourself. I don't recommend this. I've never had a property purchase or sale of my own where I didn't need the expert guidance of a conveyancer. Furthermore, purchasing a property for the first time is an emotional process. It's best, especially for your first time, to have a property legal expert as a sounding board. Get a conveyancer. Now, if you've engaged a conveyancer and you happen to live in my state of Queensland, they should have told you it's a requirement to obtain insurance coverage from 5 p.m. on the following business day after signing a contract of sale, unlike other states where it's required as of the day of settlement. Of course, this doesn't apply to properties on a strata title, something like an apartment or a townhouse, in which case the owner's corporation may have already insured the building. Regardless of whether or not you live in Queensland, holding adequate insurance is a typical requirement of lenders. Not having adequate insurance also poses significant risks since it provides essential coverage for any potential loss or damage to the property. Providing an estimate of insurance costs here is impossible. Generally, it's in the thousands, but prices can vary so much depending on many factors. Once you have found a property you want to pursue, speak to an insurance broker which can provide you an accurate quote and ensure the property has the correct cover in the event something happens. Getting to a more substantial cost now, let's talk about one of the most hated taxes out there, stamp duty. Stamp duty is a state tax charged to the buyer at settlement of a property. The amount you pay depends on the property's purchase price and varies from state to state. If you watched the previous part of this guide, you would know that most states and territories offer concessions or exemptions for first home buyers, making stamp duty more affordable for them. You can calculate the stamp duty applicable to your purchase on our website's calculator I've linked below. You can see how the concessions apply in each state and how crazy this tax can get without concessions applied. Now, before we wrap things up, I want to make a quick note about home loan fees. There are several home loan fees that may be charged up front or capitalised into the loan. Each lender might call their fees something different, but I'll talk about some common fees to be aware of. First, there is the loan establishment fee. This is a one upfront cost to establish a loan. It's sometimes called an application fee and can often cover the cost of the valuation, bank legal fees, and settlement attendance fees. Some lenders, typically Tier 2 lenders, may charge an upfront valuation fee, as they will employ an external valuer to do an assessment on the property you're purchasing. There are other fees like a security guarantee fee, which is charged if a guarantor is putting up security towards your home loan. That's generally $200. Settlement fees, which are around $200, and mortgage registration fees, which is a state tax and vary depending on the state. A lot of these fees may be wrapped up into the loan establishment fees. So to get a clear outline of what's what, it's best to consult with the lender or your mortgage broker. Guys, in the next part, we're going to be discussing LMI. Although it's an expense typical of your first property purchase, I don't want to just skim over it in this video. It needs thorough explanation as there are a lot of important factors you need to carefully consider in relation to it. So please like and subscribe, turn on notifications so you don't miss out on part 4 where we discuss it. Thank you for watching, catch you on the next one.